My guest today is Mathias Calonius. Mathias runs a holding company in Finland called JATKAJA. So far, they've made 4 acquisitions, and if my math skills are correct, the total revenue is around 30 to 35 million euros. Thanks a lot for coming to the HoldCo Builder show, Mathias.
Thank you, Mick. Pleasure to be here.
Perfect. Can you please share your background? And on top of that, there are so many different investment vehicles. Why did you decide to build this type of holding company where you're acquiring traditional businesses in Finland?
Yes, so most of my career I spent in digital consulting. I was building a company, part of the management team from about 10 to some 500 people, just organically. I also spent time abroad, establishing a new office in Germany. But my background is in the industrial management and engineering, so sort of a generalist. And how did we end up into setting up JATKAJA? I think all of us 3 who are in JATKAJA, we had some different options what to do. But what we had acknowledged is that smaller companies don't have the skills that we quite often have been using in our previous career for advising bigger companies. And I think we were along the lines of whether we should buy a single company and just focus on that as individuals, or should we go into bigger companies and buy smaller stakes and advise them with our digital skills. But at the end, we found it the most flexible and probably giving the most freedom in going into smaller companies in the traditional field and buying majorities in those companies. And the vehicle that we use, it's rather sort of unconstrained, so we don't have a fund structure. We basically we use our own equity in buying those. So we 3 of us can decide each day that what we want to do.
Okay. Before you got started, Finland is very close to Sweden, and Sweden has been doing really well with those holding companies, being a serial acquirers. Did you get some motivation from there as well? Motivation, inspiration when looking at their balance sheet, and many of them are public with very great returns.
Yes, definitely. At the time, I think we browsed through these companies. We thought that they are quite far ahead. We didn't directly want to replicate what they were doing, but certainly they were part of the inspiration or sort of a confirmation that this model is applied and works. What we feel is different between them and us is that we feel that we are closer to the management teams and we want to have an agenda on the company. I'm not totally certain if all the Swedish companies have an agenda, or if they are just sort of buying many companies in and doesn't specifically want to do anything with them.
You mentioned yourself as a generalist. What you see are your advantages over specialist, and how have you built up the team in JATKAJA? Are your partners specialists or generalists as well, or how has it been working out?
I think based on my career, I'm rather confident in going into new things. So in my previous career, I have been both starting new lines of businesses from scratch and also opening up clients in many different industries. So it helps quite a bit in this work as well, as I think that I tend to understand quite fast the logic of different companies. But in regards to what we have in team, we have three people from industrial management and engineering. So we are quite sort of coming from the same background study-wise, but of course we have done different things afterwards. One of us has been spending time in private equity field, so he has had, even before this 5 years, he had knowledge of the due diligence and all the details of using bank loans as part of the deals. But nowadays, I think all of us three have rather similar skill sets. Of course, a little bit there's a variation how comfortable we all three feel in going into operations, and perhaps I'm, out of us three, I'm the most comfortable in going in and doing things on daily basis, and that's also how I have chosen to be in the management position in one of the companies, to an extent that when the market improves, then I think it will be time also for me to take a board seat and have somebody else to run as a managing director.
Now, when it comes to investment strategy of JATKAJA, what do you and your team look when acquiring businesses? What are some obvious red flags? What size of revenue you're looking for? What size of profit margins? Which location?
Yes, I think the basic set what we are looking for is a company with a healthy business. So a company who has had several years of steady profitability. Quite often also one of the defining features of the companies that we acquire is that the entrepreneur is quite often quite central. So, but that's just a feature. So whenever we go into companies where there's an aging entrepreneur who will leave the company sometime in the near future, and it will leave a hole to fill. And but that's something that is just part of our business to take care of it. Besides the profitability, we don't have any industry specific approach. We tend to be a little bit more scared to go into construction business, and then one important point is that when we are talking about traditional industries, we by purpose we try to avoid companies where there's a possibility of digital disruption. As two of the three in the management team of JATKAJA, or the partners of JATKAJA, me and one of the colleagues, we have long experience in that field. At least we think that we know when there is this possibility of disruption. And if a company is small, quite often it will not have the resources to do the disruption itself, but it will be done by somebody else. So we tend to go into companies where there is no at least a big danger of a sudden change in the logic of the industry.
You mentioned aging entrepreneurs. How do you find those deals? Because when I started looking for various opportunities 18 months ago, I just acquired a list of companies, and one of the filters and the requirements were that the owner has to be older than 50 years old. And then I pretty much got the list, and I looked for the best ones, the companies which are growing, the companies with long history, steady margins, as you said. And then I just started cold calling to those businesses, and it has been very interesting because the first call, oftentimes they are not interested in selling, but when I'm doing the follow-up, like a month later, 2 months later, sometimes even 6 months later, they say that, okay, this call really got me thinking, and let's catch up. And then I catch up with them. They show me the business. They show me their manufacturing facility. Sometimes they even introduce me to some of their key people. And it's a very interesting process. Obviously, it takes a lot of time, but it's slowly and steadily building the relationship. So What is your process on building the pipeline and how you mentioned you've done 4 acquisitions? How do you found those deals?
I think this approach that you have been using, it certainly it works, but it might take years before the person decides that now is the time. So when you have the patience, I think this will be really fruitful. You will sort of build up the pipeline for many years to come. For us, the 4 companies that we have acquired during the 5 years is that the first one came through a broker. So there are these brokers who sell companies which are a little bit smaller. And this was even publicly out in the sales. This was the green landscaping company, and revenues were a little bit less than 2 million. Nowadays it's closer to 9. But at the time, it was suitable for these brokers to sell. We also have this chimney sweeping business, and there was a change in legislation in 2019, which opened the market. Before that, all the prices and all the areas where companies could operate were organized. So it was sort of the whole country was full of small monopolies of chimney sweeping companies. And how we entered the market was that we decided that this is an interesting market, and we acquired a list of companies in the market and decided to go for the biggest ones. And the biggest ones were still small, so doing under 1 million euros of revenues. And then we have attached many other smaller companies into that one, and all of them pretty much have come through us taking the phone and calling the people. Just lately, we have had also some incoming inbound contact in regards to that business. And then 2 other ones, they have come through some acquaintances that we have had. So some people who we have met at some point have had these companies somehow in their discussions. Either they have been friends of us or some people who have done deals with us earlier. And then, of course, the amount of companies that we have discussed with is much larger than these 4 companies, but that's quite representative of how these companies come. We have also acquired a list of companies with aging entrepreneurs, but I think we used it a little bit, but we have had so many discussions even without using the list that the list is maybe still waiting to be used.
What about year 2023? How much time did you spend on finding new deals versus operating and running the current portfolio?
This year we have had several serious discussions, which we could have taken all the way to the deal as well. I think the majority of the time still goes into the existing companies. So I don't know, maybe out of the 3 people, maybe 20% of the time has been into looking into new companies. So currently we are really trying to help the green landscaping company, which has had operational troubles for the past 2 years, and this has taken quite a bit of our time as well as our financial resources. So it has been an obstacle for us to go into new companies.
And do you guys acquire 100% of the business?
Yes and no. So the idea is that we acquire the whole company, but the previous owner, we asked them to join in with a smallish stake, 10%, 20%, something that is fitting for them. And we also sort of incentivize and try to have the new management also to be entrepreneur-minded and have a stake in the company. So at the end, in average, the stake that we have in the company is as JATKAJA, it's about around 70%, something like that.
And how much competition has there been on the deals? And has there been some deals which you didn't end up buying?
Competition, it's hard to say how much there is. Certainly there is. The private equity companies, they tend to focus to a little bit bigger companies, but still there is competition. And what are the options for us? So for the seller, there are maybe some other companies who are buying sort of industrial buyers is probably the biggest competition that we have, and then there are these people who just decide that they will not sell for some years and they will continue running the business. So there is a story of a company whose owner was, I think, was he 89 and the CEO was 69 and they continued running the business still for some time, and we never got the deal. Yes, the other question, the last part was yes.
No, there wasn't the second part.
Okay,
I think there was how much competition there is on deals.
Yes.
And have you lost any?
Yes, have we lost? Certainly, we have lost. I think quite often the reason is that the deal just doesn't happen in that sense. Have we lost to somebody who has then really bought the company? This one deal that with these really old entrepreneurs, they eventually decided to sell somewhere else. So I think there's a certain limit how long the discussion is lively, and then at some point it will sour. Even if people have good intentions, it just you cannot keep active too long.
You mentioned the green landscaping business. You've grown that from 2 million euros in revenue to 9 million, right?
Yes.
So what is the biggest value add you see when you do a due diligence to this type of company?
So there are two main values or value adding elements that we bring. The first one, which is in itself enough to justify the buying of a company, is to confirm the continuation of the company. So there is an entrepreneur, and these companies, as mentioned, they quite often they are entrepreneur centric. So if you take the person out, the company doesn't operate anymore. So when we are going in, we quite often, first of all, we ensure that the company can continue operating and keep the profitable level that they have. And the other thing related to that is that we all start organizing the company so that it's not so single person dependent. So we define and bring in organizational structures which are more familiar in sort of a long-lasting companies. So that's one side, and if we succeed in that, that's already enough to make the investment good for us. And the second part is then to find the opportunities for growth, opportunities for renewal, and this quite often might take a little bit more time than expected, as these companies have been quite steady for a long time, and people in the company have also gotten accustomed to being in a steady company. So to bring changes, it often also involves changing people, sort of the mindset of the people, and this takes time. So I think one of the lessons we have also learned is to have patience in not pushing too many things too fast. Otherwise, we sort of choke the operations of the company.
Can you share some exact or specific examples or some strategies you've implemented to drive growth within those portfolio companies?
Well, a few different strategies to describe. In the green landscaping company, we have integrated some smaller companies into it and brought in that way also some new people, and this has then accelerated the growth of the company. We have brought in a company that, or not a company, but part of another company who were focusing on maintenance of these green spaces. And after coming in, their organic growth has also been fast. So if it was stable before, we provided them an environment where they can grow organically. And then we have also on the construction side brought in this sort of not a company but parts of a company, and they have then multiplied the business units that we have had. That's one. And then in the chimney sweeping business, it's sort of a bundle of things which aim to build a stable, profitable business. And one part of it is that we have an own ERP system. So we have own programmed system which operates the people who do these chimney sweepings, and every sale is small, and there are many of these sales. So to have your own operational system is beneficial. We also looked what is available, but we didn't find anything suitable. So we bought a company who had a system like this. So now that we have this system, we have been able to apply it then to a bigger volume. So it gives the efficiency to the whole company. So that has been one sort of a key block in making that business grow. And after having that in, then we have been able to integrate many small companies into it. So I think we have maybe bought 7 or 8 or 9. I don't even know the figure, how many, as I'm not directly responsible for it, but many small companies. And it started from less than 1 million, and now we are in 5.5 million euros after 4 years.
So you do a lot of bolt-on acquisitions, but those acquisitions are 100%, right?
Yes.
Mm-hmm.
And sometimes the whoever sells the add-on company, they also become small owners of this bigger entity that we have. We are open for it, so it's more dependent on what the seller wants.
And I guess this makes the purchase price a bit lower as well, because they have this potential of this upside, right?
Possibly. Mm-hmm. Yes, hard to say.
What have been some biggest mistakes? You have tons of experience building a holding company. Can you share some specific instances where you made, let's say, a significant business mistake, and what was it maybe, and what did you learn from that?
The biggest mistakes, I'm using the green landscaping company and the chimney sweeping company as examples. So in green landscaping company, we were too anxious for the growth and didn't focus enough to the profitability. So we were a little bit blinded by the growth figures and didn't sort of focus the company enough to the right things. And this is also, of course, part of the reason why we are in trouble at the moment and trying to fix the profitability of the company. And related to that is also that the management really has to have a good relationship with the board. So both sides need to have a mutual trust to each other, and then it works well. And also that both need to feel that they're at the same level, so that they can sort of openly discuss about everything. And in the chimney sweeping company, we knew that we need to build it bigger, and to sort of even to cover the expenses of the CEO. But somehow we thought that we could increase the size of the company before we get the CEO in. But that was a mistake. So we should have just done the calculations and taken the CEO in the beginning, and sort of understand and agree on the expenses that the CEO will bring. So we brought the CEO in too late. We had a bit of a hiccup before that. Eventually everything went well, and the key role of making things well was that we found a good CEO who then could take over, and then we could focus on the right things after that.
But how is it going to be in the future? For example, you have few targets in your pipeline. Do you already start talking with various CEOs on the market before and building the relationships before making the acquisitions, or you do a deal first and then you'll see, okay, this is who we need, and then you start the process?
Good question. We have had several approaches so far. In the first one, we had the CEO ready, and so we started talking before the deal was fully insured. And in the last deal, which was this engineering architecture company, we made it a little bit easy for ourselves. So we decided that I personally would go in, so we didn't have to look for the person straight away. The idea was that I would be for a year, and then we would look for the person longer term. As the construction market is having such difficulties, we decided that it's better for me to stay here. So I wouldn't. So we are more certain that things go well if we don't try to introduce a person at the time when the market is in such difficulties. So it's easier when things are a little bit better for everybody. But in the future cases, we probably don't have a one approach. We most probably would like to have the person quite from the start. So we would start the discussions and try to get some sort of a commitment even before the deal is closed.
I want to talk a little bit about the risk management across your portfolio and focusing on a selling side, selling products, selling services, because I've met many of those small, boring, traditional businesses, revenue between 2 to, I would say, even 10 million. And what I've seen a few times is they've been knowingly doing this is the owner takes care of the sales. He doesn't want to hire, he might even have actually few salespeople, but the main relationships, main contracts, he still, to this day, after 20, 25 years running the business, he takes care of the sales because they've said that it's such an important part of the business and they don't really want to outsource it, even to the salesperson who could be your right-hand man. How has it been in your portfolio and what have you seen?
Yes, that's quite typical. And that's also the biggest thing then to be paying attention to when you buy a company, because when the person goes out, the relationships go out as well. Mm-hmm. So you lose quite a bit of the business, possibly at least. So so I think that's something that you always have to work on. And I just had a discussion a week or two back with an engineering company, a smaller one, who we have been in some dialogue, and I asked that person that who is responsible for the sales. So what is your role? that was the owner of the company, and he said that, well, I'm mostly doing the sales. So I said that you have to start early enough to give it time enough to sort of transfer the relationships, and that might even take years. So it would be good to grow a person from inside while the entrepreneur is still in, and sort of grow the person who will be the future entrepreneur from inside. So possibly take a new person in who has the qualities to be the future CEO, and start transferring knowledge and the contacts to that person. So what has happened in this engineering architecture company that I'm running was that I have had to build the relationship by quite a bit of effort. A lot of time and phone calls and emails have been spent to make the relationship to stick with me, stick with the company, and not to disappear with the entrepreneur who has already ended his commitment. And I still think after 1.5 years or closer to 2 years that I still have things to do, so it's not complete.
You have 5 companies in portfolio. There is 5 days a week. How do you spend your time? Is it one company per each day, or how does it work?
So we have agreed that in each company there are 2 of us involved. So I'm involved with 2 companies, and then my colleagues are involved with the other companies. I personally spend most of my time with one company. I'm running this architecture engineering company. So 80% of my time goes into this, and then 1 day per week goes to the other company, which is the green landscaping company. My colleagues, they have a little bit different split with their time, and currently we, all of us 3, are a little bit using more time to the green landscaping company that we would maybe we would be planning to use, but that's how it is. There's always something needed in one company, and then the focus changes to other one. So to have a even split, predefined split, that would be nice, but I think the day is what defines where you spend the time. So there are different phases in the market and different phases in the companies, and that's what draws your attention then.
A bit more personal question. There are a lot of challenges going on with businesses, but at the end of the day, it's the pressure is on you. You made the investment. You may be serving the investors. Can you share any particular, difficult moments or lessons in your career during this JATKAJA journey, and how have you gone through this a little bit? An experience to you, I started building this 18 months ago, and one of the biggest lessons for myself has been things take longer than it used to be. What I mean is, when I used to sell different products and services, it took maybe a few days to get the response to make a purchase decision from the buyer. These days, things take weeks, months. And closing one of the B2B customers even took me 18 months. I was very consistent, wished him happy birthday, Merry Christmas, all those things. And then one day we got an opportunity because our competitor really messed up. And the patience is the big thing, big lesson till this day, I would say. But what is this? How has it been for you?
I think the pressure is not so much coming from outside as we are mostly serving ourselves, and we have a good dialogue between us 3. The pressure is more that we would like to succeed in all the things we do, and sometimes when things don't go as planned, then it's more of an internal sort of a motivational factor that creates the pressure that you want to succeed in the things that you do. and things take time. So I totally agree that you can't sort of speed up things more than what the sort of the environment outside of you is willing to take, whether it's business to business sales or deals or something. That's just has to be accepted.
Now, going back to the JATKAJA's portfolio, how do you see it being very diversified? I mean, you serve different sectors, but you mentioned the green landscaping business has been growing from 2 million to 9 million, even though it has been through bolt-on acquisitions. But what if you take all your time, all your effort, all your capital, and you build the biggest green landscaping business in Scandinavia instead of chasing those other opportunities? What's your take on this?
Yes, that's a really good point. In the beginning, our idea was that we take companies in, and then after a few years, we have paid back all the debt, and then we can take in additional companies. But so far, we have sort of grown already the green landscaping company faster and longer than what we thought that we would be at this point. And it's the same with the chimney sweeping company. The idea wasn't to do so many acquisitions and to invest so much in one company. But I think that if and when you find a company where there is a profitable growth available, I think you should follow it. It's not certain that you will find similar ones in the near future or or any time. So if you find a good company, you certainly should focus on that. But of course, you have to consider that what's the best return on the money that you put in.
What about the portfolio today? What I mean is the ratio between export and import, or I would say export versus serving the local Finnish market.
I think all of us three have some background in working abroad and serving companies abroad and so forth. But currently, all the companies that we have, they purely focus on the Finnish market, so on the local market, which is a bit of a pity. But still, it's one phase that we are at the moment. So hopefully, we would have in the future some companies who also have business abroad, which then would make it more interesting for all of us, I think, to be able to apply the skills that we have from our previous background.
Now, there is a saying, when a great team meets a bad market, market wins. When a bad team meets a great market, market wins. When a great team meets a great market, something special happens. Based on your experience, what are your thoughts about this?
I think that I can fully agree. So if there is a great team and a bad market, great team will have really big difficulties to overcome what the market defines. And if there's a bad team and a good market, I think you will not notice that it's a bad team. So the market will still support enough to sort of put the bad qualities of the team in somewhere that you cannot see them. But eventually, when the market goes bad, then you will be in trouble. So I have also seen this in some of the companies. So company thinks that the management team is great and things are going well, but actually it's all about the market and not the management team. And the last one, great team and a great market, or a good team and a great market, that can also happen. So I have been also involved in that type of positions, and this is also possible with JATKAJA. So I think we are facing some challenges at the moment, and if we overcome them, I think the market will be really good for us. So hopefully we will be able to get to that position sometime. But overall, of course, the economy is in troubles at the moment in many countries, and we see mostly light in the year 26, which will be good again. Of course, 24 and 25 will be better than this year, but the next possible good year is 26.
I was asking this saying because I was listening one online conference, and there the presenter was asking from the audience, like, raise your hand if you have this 1 or 2 or 3 people who you know who are not the smartest, not the most experienced, knowledge-wise, experience-wise, but they're still doing extremely well. And like half of the audience raised their hand, and people started laughing. And then the guy said that you can see, what you see is that even with a bad team in here, I mean, not the smartest guy, let's put it in this way, can still do remarkable things when the market is very good.
And it's not always even about smartness. So you can be really smart, but you are not able to complete things. So one thing about being an entrepreneur is bias towards action. So you don't have to be the smartest, but you have to have the bias towards action. So whatever needs to be done, you do it.
Talking about a little bit about your philosophy when it comes to investing and growing businesses, and what I mean in here is I have 2 companies I met. They're in the same size. They're competitors, both to 4.5 million in revenue. I met with both of their founders, and it's very interesting. One of them is one company's profit margin is around 400,000-500,000 euros. Another one does 150,000-200,000. The guy who does less profit, he's a good guy, knows everything about the market. When I asked from him, when was the last time you raised prices? He said that this was long time ago, like 3-4 years ago. And I said, why are you doing this? Why haven't you done it? And he said that he just wants to serve those clients. He's living a good life. He doesn't need to be greedy, as he said. And then I'm asked him, how do you, what would you say about the other guy, your competitor, whose numbers, profit margins are better? He said, this guy is extremely greedy. People talking bad things about him, etc., etc. And then he actually made the intro to his competitor, and then I caught up with this guy, and this guy was a proper businessman. He was talking about the great business he has built, the great profit margins, the cars he have bought, all those things. And I asked from him, like, your competitors saying things about you that you're this hardcore business guy. What are your thoughts about him? He said that this guy is just wasting so much opportunity. He provides so many great products and services, but he's just too good in that way. And meeting both of them, they are both very good people. They know about their market. One guy is more business savvy than the other. When it comes to this example, what is your, I would say, philosophy when it comes to building a business and running and growing a company?
I think both of these people, both of the men, do what is suitable for them. So I think also the person who is not asking so much money from the client is doing what is best for him. So he's sort of choosing comfortable life for himself. My philosophy is, of course, that you are in the market and you ask the market prices, and then the clients decide if they buy from you or from somebody else. What you lose in asking too little prices is that you sort of leave something on the table that you could use to grow the company or to renew the company or do something else with the money. So I'm rather growth oriented, and this is also about sort of a personal growth of the people. So I would love to see people to grow professionally, and quite often the growth of the company provides these opportunities. But one thing additional to mention is that I believe in honesty, and we had one deal where I wasn't sure if the sellers were genuine, or they said what they actually thought. And luckily this deal didn't it was not completed. We were supposed to be minority owners, and the majority investor decided that they will not go for it, and I was happy at the end that it didn't realize. And afterwards I looked the numbers of the company, and they suddenly had turned awful. So I don't know what was really wrong about it, but you have to also, if you do a deal and buy a company from somebody, you have to trust the person that he's honest.
Yes, and again about those two guys, again they were both good people, good values. I've spent a lot of time with them now, but the guy who's making more money with his business, he said a valid point. Like, he can take better care of his employees. Number one, and number two, the office was brand new when the other guy is still in a very old building. The salaries are higher in the company which is doing better. So I've been reading about this stuff on the book, on various books, but now I seeing those things in real life and comparing those two companies. Obviously, there is more potential on the one which is doing not so good. But overall, looking at and comparing those businesses, there are two different ways of running a business, and I tend to be towards to the guy who's charging more because the way he was taking care of his people.
Well, I would say the same, that with the one who is not as profitable, you would have a transformation to do. And of course, it's not certain if you succeed with it. So I think the company with the higher profitability, they have in the company already the qualities that you would like to have.
A little bit about again, you personal and inspirational stuff. How do you handle the I would say pressure and responsibilities that come with being a co-founder, being an investor? And what I mean in here is, what do you do when you're not working?
I don't feel so much pressure about what I do. I feel that it's just the work. It's just a job that you do, and I could do something else if I didn't do this. But what do I do besides the work? If that's the question, I have a family, and what has maybe tipped off the balance a little bit, that things are not so good for the past weeks, is that we got a small dog puppy 2 to 3 weeks back, and as it's a baby dog, it's keeping us awake during the night. So it has taken quite a bit of my energy, and I like to do sports, but unluckily I haven't had the energy to do it so much during the past weeks.
I'm in a very early days of building what you have accomplished already. Let's put it in this way. So what are some, and I know many people who are listening are in the same position like myself. What are some of the most obvious and maybe most valuable lessons you've learned from your experience of building JATKAJA?
One thing is that the first company you go into, that's super important, that you succeed with it. If it fails, you will not have the opportunity to go to the second one. And then each company you should take as seriously as it will be your own, one and the only company. So the portfolio doesn't sort of provide the cushion, but you have to manage each of the companies as you would only have that one. And something else is that I already mentioned that the relationship with the management have to be really good. So both have their own roles, but you have to play together. So That's one thing. And if there is trouble, if there's wrong people in the place, you should act fast rather than slow. Even though it feels a little bit uncomfortable, as in smaller companies there are only a few people, and each person is quite a big part of the company. But still, I think that you have to change the people if they're the wrong ones, and luckily quite often there is also other people in the market that you can then take in.
One question I actually forgot to ask. You mentioned you're focusing most of your time on one business. Your partners, they have their own businesses. Hour-wise, how much are you spending on those businesses on month? Let's put it on week-to-week basis. You have 40 hours, maybe 50. How much do you spend on each business, or thinking about?
The idea that we have had is that that we have one person who is the head of the board, who uses 1.5-2 days per week per company, and then there is the additional other person in the board as well, who uses maybe 1 day per company. That's the plan, but so far we have had always some additional reasons than why we are spending more time to companies. Mm-hmm. If there's some add-on discussions, or if there's some challenges operationally that we are helping out with.
Do you see the same system and schedule works when you have 10 companies in your portfolio?
Yes, so it has been planned so that we can handle around 10 companies with the team of 3 people.
Okay, Mathias, a little bit about the future. What motivates you today, and what do you want to accomplish next?
I think we are still, and I am still building JATKAJA to achieve the sort of the wheel that we have been looking for, so that the wheel provides, the existing companies provide enough of cash flow to acquire the additional ones. So this is my motivation. Other motivation is that I always feel happy to come to work and to be involved with these companies that we have, as there are lots of nice people, and I know that if we weren't there, it might be possible that the company didn't exist in the form that they still exist.
You mentioned financing the next acquisitions with your current profits. Has this been easier or harder than expected?
It has been harder, partly because we have been spending so much money into existing ones to grow them faster than we thought. Currently, we are facing some of the operational challenges, so it has taken sort of a 1 or 2 years back from our timeline. So hopefully we will get there, but so far it has been slower than expected.
Okay, so how has entrepreneurship and building JATKAJA changed your life and changed your family life?
I was in the management team of another company before starting JATKAJA, and I think my life balance is much better now than what it was before. So it's partly because I'm sort of serving myself and my colleagues, so I have the flexibility to use my time as I see fit. And partly it's also maybe that I was for so long in one company that it has been refreshing to do other things. For my family life, I think I'm also more present for my family with JATKAJA than I was before.
Good. Let's wrap up with a famous 5. How old are you?
I'm 46.
Favorite book?
One book I would recommend is Munich. It's written by Robert Harris. It tells about 1938, a meeting in Munich, which preceded the Second World War. So I think history is quite informative for us in many ways, and I have been spending quite a bit of studying what the Greeks have been doing, and also things after that.
Married, single, kids?
Married and 3 kids.
What car do you drive?
A BMW 530, which is 12 years old.
What's the best investment advice you've ever got?
The best investment advice is that you should only invest into things that you really understand. So many things that people offer, but go on only for the things that you really understand.
So let's say there are some folks from Europe, from USA, from all around the world who understand what you do and what you want to build and what you're already building. Where can people find you?
I can be found from Helsinki and LinkedIn, and in Helsinki, of course, you can also find me from football fields or tennis courts playing something after the work. But feel free to contact me if you want to have a discussion or just say hi.
That's awesome. Thanks a lot, Mathias, for doing this.
Thank you, Mick.